high dividend stocks in Bursa Malaysia for this year. These stable Malaysian dividend stocks are currently giving 5% or above just for dividend returns. Number 1, we have Zulian. At the current price, dividend yield for the past 12 months at 9.5%. Zhulian Corporation. Zhulian Corporation is a Malaysian multi-level marketing company. If you have ever been invited to a business opportunity meeting by a very enthusiastic friend, there's a chance it was something like Zulian. They specialize in selling a wide array of products like health supplements and personal care products that promise to keep you feeling like you are 21 forever. For people who are always thinking, I wish I had the look and energy of a teenager but with the wisdom to not make the same life choices. Their jewelry line is perfect for those who want to add some bling to their life spending without spending a fortune on Hermes or LVs. Others include home appliances and consumables. But wait, there's more. Zulian operates on an MLM model. Not only you buy some of their products, you can become a distributor yourself. It's like turning your shopping habit into business opportunity. You get to be your own boss, so-called. Recruit your friends and together climb the ladder of success, or at least the MLM pyramid. For the past 1 year, its stock price has been on the downtrend, the opposite direction compared to the broad Malaysian stock market. Its share price has been historically stable before recently. However, it may change for the worse in the future. So if you want to stay up to date, do follow and subscribe if you prefer weekly email update. There's a link in the description below or in bio. Now, how likely is this dividend payout can be sustained or even go higher in the future? For this, we look at its net margins. It turns out that it is a moderately high margin 20-ish% business when you divide the profit after tax with revenue. For the past 5 years, Zulian profit growth has been in the negative territory. In other words, shrinking, likely due to price and product variety competition from Shopee or Lazada, and heck, even TikTok Shop for the products it manufactures. This is an example of a high dividend yield due to drop in stock price, not due to growth in net dividends per share as the case for Zulian. This has been flat since 2020. Now in 2023, it shrank. A disclaimer, this is not investment advice. It's also not a recommendation to buy the dividend stocks covered, as I do not know your financial needs, circumstances, risk appetite, or investment objectives. Then next, we want to look at these stocks' dividend risk to you. For this, we look at a company's leverage and show to the extent into which operations are funded by lenders versus shareholders. Gearing ratios are financial metrics that compare a company's debt to some form of its capital or equity. The only good news for Zulian is that it has gearing ratio of 0 with ample of cash reserves. Number 2, MBM Resources Berhad. At the current price, dividend yield for the past 12 months stands close at 9%. MBM Resources Berhad is like the ultimate multitasker in the automotive world. Think of them as a juggler who not only keeps all the balls in the air but also throws in a few flaming torches and maybe a chainsaw for a good measure. At its core, MBM Resources is an automotive conglomerate that has its fingers in pretty much every pie related to cars. They deal with everything from manufacturing to assembling car parts, the likes of wheels, airbags, seats, and steerings, to distributing and retailing several major brands like Daihatsu, Mitsubishi, Volkswagen, and Volvo. If it has wheels and goes vroom, MBM probably has a stake in it. They represent making sure that Malaysians have plenty of choices when it comes to picking out their next ride. For the past 1 year, its stock price has been uptrending, or more accurately, skyrocketing. The fact that dividend yield is still at its current level despite price has gone up 40-ish% percent is commendable. Imagine holding MBM Resources stocks at 3 ringgit per share just 1 year prior. Your dividend yield could have been close to 14%, no joke. Now, how likely is this dividend payout can be sustained or even go higher in the future? For that, we look at its percentage net margin, and that ranges from 10 to 15% for the past 5 years. With the exception of pandemic year, MBM Resources net profit growth has been quite impressive, as low as 8% to as high as 60%. The next thing to do is to look at this stock's dividend risk to you, checking for possible red flags. Now, in finance, a gearing ratio refers to a company's financial leverage, how much debt they use to run their operations. That can help a business grow faster, just like in racing. Higher gears lead to greater speed, but too much debt can cause problems. If interest rates rise unexpectedly, heavily geared companies get into financial trouble overnight. Right away, you can see there's nothing to worry about for MBM Resources gearing ratio. Of course, this may improve or worsen in the future. So if you want to be aware of future changes, do follow and subscribe. If you prefer weekly email update, there's a link in the description below or in bio. Questions, ask below. Here's your next high dividend stocks clip to watch. There's an entire series of this. Also check out more of these global investment strategy videos updated monthly only for CF Liu channel insider members.